Boris, you've heard the term bring a gun to a knife fight, I am sure. Now, right now, we've got President Xi and President Trump sort of parrying, if you will. Do you think there is a chance that China could bring out what I'm going to call the economic bazooka and devalue their currency?
Well, yes, they could do that, but they could do other things that I think could be much, much more harmful to U.S. business interests. They could really make it very hard for U.S. companies to do business in China. You know, Apple sort of is the poster child for this problem. How much 25% of Apple's profits come from China? If they could just make all sorts of regulatory barriers that are arbitrary and make it much more difficult for them to operate. So I definitely think that the escalation of hostilities here is not something that investors want to see, and the markets are clearly reacting at this point because they fear that instead of de-escalation, we're actually having a increased escalation of trade war talk. And usually when these things go, it's like a snowball effect. It never stops, and it gets worse before it gets better.
Yeah, it does. But, you know, again, we're starting now to see some articles come out about the possibility of devaluation, something you and I have talked about for a while, and we've asked other guests on this program about it. They've poo-pooed the idea because they basically suggest that would make China look weak. It would basically be going to sort of the last mile resort that you've got economically.
I agree. I think, you know, they have other tools at their disposal that are much stronger. And also, I mean, they actually did pump about 500 billion yuan over the weekend by lowering their RR rate, which created more liquidity and credit for the economy. They are trying to respond monetarily, but not on the exchange rate front just yet. Yes, I mean, I think they're clearly concerned. Everybody's concerned at this point. And of course, you know, the trade war issues is not just simply a bipolar issue. It's becoming a multipolar issue, and that could create, you know, all sorts of fears of the Hoot, Crawley, whatever. I forgot the tariff from the 1930s that created just a complete pall on economic activity in the world. So investors at this point are starting to get very concerned that this could really turn much worse.
Well, we are beginning to hear some rumbles from the corners of the internet about Smoot-Hawley. I think it is very early.
Right?
It is very early, Boris. But I mean, listen, there's always going to be those fearmongers out there on the internet, right? But do you think there is a risk of a global trade war? We've got this news from the EU, which we're going to get to in just a minute, basically about auto tariffs that would shut down this global expansion right at the peak moment.
Well, so let's take the auto tariff issue at hand, because the big argument from the Trump administration is that the Germans have a 10%, or the Europeans have a 10% tariff, we have a 2% tariff on cars, and Germans sell 3 cars for every 1 that we sell to them. But if you think about this, Germany's population is 1/3 the U.S. So in many ways, this actually proves that tariffs don't work and are not really a good economic measure. So it's very, very hard to see why they're trying to, you know, to go toe-to-toe with Europeans on this particular issue. Europeans, I think, are very scared because the amount of business here that it could affect Mercedes-Benz and Audi and BMW is tremendous. And the point being here is, if you're going to have a sort of a trade war, you really want your allies on your side. What's happening is we're going to war with everybody. And if we go with war with everybody, it's a multipolar world. It's going to be very difficult for us to achieve our ends, given the fact that everybody is going to be now against us instead of with us in this particular endeavor.
Many of our viewers and listeners might agree with you, but they're probably in their car or watching, you know, sitting and drinking a coffee this morning thinking, okay, what do I do? Does that mean we dump stocks and hide our money in cans in the backyard? I mean, what is the reaction to this? Do we need to take some risk off the table? Do we need to be more cash heavy and wait this out?
Yes, I think you know, there are all sorts of signs that are flashing yellow at this point. The S&P, you could see just on even a technical basis, is really stalling at the highs. And if this gets worse, it could get much worse very quickly. The problem here is that by the time you realize that there's a problem, it's too late. So at very minimum, I think investors should either lighten up or buy some put protection going 6 months. You know, if all things kind of resolve themselves perfectly, then it should be no problem. But you really want to be protected. You know, you buy, what is it? You buy hats in the in the winter, or I mean,
buy hats in the summer. Buy skis now, exactly.
Right,
and buy swimsuits in January.
Yes, it is precisely because things are still looking okay that I think it's very important to be cautious.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.